All right, guys, welcome back to another Imperial Wealth podcast. We apologize that we haven't got one out this year as yet in 2023. We've been absolutely flat out on the back end of the side of things, getting our new website up and running. All of our members features moved across from our old brands, the Cash Kings and Mining Store. Mining Store obviously is still in existence, but we've moved everything from our trading side of point of view across to Imperial Wealth now. We're really excited about this. This has been a 2 year development of getting all of our software, all of our services, everything ready to bring across. Just to quickly tap on what we've actually brought across, those of you that are Trading Academy members, you'll notice the brand new UI that's available on there now. Everything's a lot more neat and tidy. You've got all your trades in the one places, you've got all your analysis in other places, and maybe in another podcast we might actually go through and do a bit of a live run through of what everything's looking like over there. Obviously, we are in a much different market now compared to what we were in last year. Wouldn't you say so, Mitch and Taylor?
Yeah.
Yeah, yeah, definitely. So I think probably the last time we left off with podcast was probably around that FTX crash. Or I think we might have had maybe one podcast after, or maybe it was just before. But yeah, essentially, there's been a lot that's happened since then, both within the cryptocurrency market and macroeconomically. We've seen, a few Eastern economies starting to ease with their rates and open up the liquidity into their markets. And we've kind of seen the contrary in the US, which has kind of eased a bit, putting in kind of 25 BPS interest rate hikes as opposed to 50 with inflation, beginning to downtrend. But, a lot has happened kind of since we last updated you guys, including fundamentally across the board. So we'll touch on a lot of that stuff later in the podcast.
Yeah, it's a pretty stacked podcast. I know that towards maybe the end of last year, we were kind of almost saying maybe we should do things every 2 weeks. It's a bit repetitive what's going in the
Yeah.
market. It was getting a little bit dry. Now it's almost like we should be doing one every day. There's something going on. There's new opportunity left, right, and center. So
Yeah.
really keen to get back into these, keen to re-engage with the audience. Of course, at the end of the podcast, if you have any questions, things that you want us to cover next week, pop them in. But we've got plenty to cover this week, so let's jump straight into it. And do you want to go over a quick recap of FTX there, Mitch?
Yep, we can definitely do that. So I am unsure where we left off with last time, but yeah, essentially for those that don't know, I'm sure a majority would know, we had FTX collapse in, early November. I think it might have been around November 6th to 9th that this whole fiasco was occurring. And essentially, it was because of reports coming out on Twitter, and I think it was one mainly done by CoinDex, in which, it showed the insolvency and, the risks associated with their balance sheets as they'd over leveraged themselves with their own affiliated trading firm Alameda Research. And then, of course, this tied in with their own FTT token that we saw. I think it's still going around now, trading up and down as a bit of a meme token as such, kind of like Luna is, which we touched on a lot in our earlier podcast when we first started doing the mid-year last year. But yeah, kind of since then, just to speed things up, SBF was eventually arrested in the Bahamas and then extradited to the United States. He's been on house arrest since then. I think it's going to be a while before we see a true trial come to light for this, given the nature of it. But
I
I think
always
it's
like listening to the questions that people have from outside of the crypto industry, and like the
yeah,
biggest question that I had coming from whether people in financial services or stockbroking, whatever, was, how does the cryptocurrency industry come out of this from a trust
yeah,
point of view? We were just starting to get institutions to be willing to accept blockchain and start getting involved with
yeah,
cryptocurrencies, and then how do we get out of this? And honestly, I mean, it happens time and time again, doesn't it? People just
yeah,
tend to forget about it,
yeah,
move on, and the next opportunity comes up, and all of a
yeah,
sudden, everyone wants to jump back into it again. So already,
yeah,
I feel like the people have kind of put this one, to a degree on the back burner a bit. I'm sure there's major institutions that haven't,
yeah.
but there's been major companies coming out, Amazon, Google, really the list goes on, Tesla, all of them that have still been willing to get involved.
Yeah, and I think it's a good point. I did an article, I think back in December or November, and it explored why the FTX implosion was actually a good thing for Bitcoin. And, the number one thing that we always come back to is decentralization. people need to understand that particularly Sam and FTX were strict opposers to Bitcoin, and it was because they're such a centralized entity, and Bitcoin is its own decentralized protocol that has no true regulator, has no specific owner. There's no one knows who created the code for Bitcoin. No one owns the code. No one owns the blockchain, whereas this is a lot different with something like an FTT token, and it was why it was so easy for something like this to happen. And I think in that article, I explore, like you said, this isn't the first time. We can reference Mount Gox as a pretty similar black swan event, but I think it's had over 466 different types of events like this since 2009, since it traded for
Unbelievable.
merely a couple of cents, and now it's trading at 24,000, 23,000. So these things, as opposed to the initial view, it is bad when it happens, because your first thing you see is the price action. You see Bitcoin lose heaps of steam. You see all the news articles, the media, but at the end of the day, it's actually what strengthens Bitcoin and its protocol, and the belief system behind it.
100%. No, it's a really, really good point, and it just shows the power of the king, Bitcoin.
Yeah.
I think Ethereum's doing unbelievable things out there as well. I mean, recently, I think we're going to tap into the Base announced that they're going to be launching on the Ethereum virtual machine as well.
Yeah.
So that's a massive, massive point for Ethereum, and really
Update
since
happens today, yeah? Or is it tomorrow?
What was that, sorry?
Is it Shanghai finishes today or tomorrow?
Yeah, I think it's very, very soon. Yeah. So I think, there's a lot of kind of skepticism out there at the moment around, what unlocks with Shanghai and what people will do with their F. And, I think it's something we can probably explore a bit later. But yeah, overall, it's going to be fantastic for the industry, I think.
100%. A recent bit of a FUD event we had not too long ago, about last week I think it was around that topic of stablecoins and what happened with BUSD, which is Binance Smart Chain's stable currency, I suppose.
Yeah.
Do you want
Yeah. Sorry. Yeah. So I think we saw the SEC and good old Gary, our friend Gary, kind of go after Binance and CZ. Well, funnily enough, it's not even against Binance; it's against Paxos, the issuer, who are the ones that are responsible for minting BUSD, which is obviously Binance USD, the stable coin of Binance. But yeah, it's a bit of uncertainty around that right now. To a lot of people, it looked like the SEC just trying to get their fingers in a pie. And we know how hard governments, particularly even the US government, are kind of trying to push for a CBDC, a central bank digital currency, which would allow them to kind of oversee their own stablecoin blockchain, and they can probably integrate social security into it and be able to track everyone's transactions. And
Mm-hmm.
there's a wider picture at play here. It's not just simply them thinking that BUSD is a security, which I definitely don't think it is.
They don't not like stablecoins. They just don't like not being. They don't like being able to control them.
Yeah, exactly.
Yeah, exactly.
Yeah.
Because I mean, the case in point is the BUSD is the one being gone after because it's under the American jurisdiction, but you'll never see USDT tether under the Hong Kong jurisdiction kind of go under. And there's this whole stablecoin war. There was rumors that USDC were the ones that dobbed BUSD into the SEC, and we know that BlackRock has big investment ties into USDC, and then some people seem to believe that this is the SEC and the government going after Binance because SBF got done by CZ. And, we all know SBF was a big supporter of the government and had regular meetings with them and was an opposer to Bitcoin, just like the SEC kind of are. So, yeah, it's a bit of an interesting watch. It was a bit of a FUD event. There was a bit of a sell-off, I think, after it. But I think, I don't think much will come of this.
You'd be pretty happy if you picked up BNB at 280 again. Do you know what I mean? Like,
yeah,
I bought it on the dip. I literally had BUSD in my wallet, and I was going, you know what? I reckon this is a bit too much FUD for. I mean, if Binance goes down, like it's going to be horrific for everything anyway. So I transferred all my BUSD into BNB. And literally got it on that dip. So,
yeah, exactly.
I was going to say, I mean, in the past 3 months, we've launched the DeFi course as well, and we've started getting a lot of our members into DeFi. And personally, I've been doing a lot of DeFi myself, and the more you kind of engage with it, you do realize how important stable coins are. how important they are to the industry in terms of being able to move funds around, in terms of being able to get into a safe place and avoid volatility in bad times. And it is hard to find a stablecoin that you trust. There's always that downside, whether, okay, it's potentially open to being attacked by the SEC, like BUSD might have just been, whether it's USDT and the FUD around it is, that who knows if it's actually backed one-to-one, whether it's a one like USDD, was that, what was Luna's one coin?
That was
UST.
UST, yeah.
UST, whether it's one that's
Anchor.
algorithmically backed, and who knows what can happen there, can be completely open exploit. So I do think that there's a space for regulation to get involved and assist with making it more stable, and that's what we're going to get from the from the government getting involved, is we do need that kind of more security and stability. But simply just kind of shutting things down when millions of, if not billions of dollars are involved, is not the way to go. So we'll definitely see what happens there. But any points?
It's kind of a good positive in a sense, though, as well, though, because obviously, I would say it held up quite well considering what's happening.
Definitely.
It's a positive out of a pretty dark light that it regained its peg pretty quickly, didn't it?
Yeah. I think pretty much straight away. It wasn't too long, but I did just want to quickly add something, because when we're talking about UST, and I think I've spoken to you guys about this before, is kind of the hindsight. Well, in hindsight, it's kind of funny that these ones that are essentially backed, e.g. by the US dollar, requires a lot of centralization, which then opens up the door to regulators then just banning it. And then, you get all these people that lose, say, their stable coins or their money and stuff. And it kind of makes it funny that Luna did have the right idea, that if you have the stable coin that's backed by the most decentralized protocol on earth, which is Bitcoin, and that's how it's minted and issued, then you can't have any regulator, you can't have any government intervening, because they have no jurisdiction in it, because it's operated and minted by Bitcoin, which is the funny thing. But obviously, Do Kwon and Luna stuffed it. But hopefully one day there's somehow some magical decentralized stablecoin that's able to algorithmically produce based off, probably a bit more of a stable Bitcoin pricing, and then it can go from there.
It's such a hard one as well. I mean, like you say, oh, it'd be great, but then what stable coin or what fiat currency do you peg it against? Like, are we really that confident it being pegged against the US dollar? I mean, I suppose we have to be, but not even that's really that, much of a stable. So, we'll see what happens, but definitely really interesting space. I know that a lot of people ask questions on it. What's the best one? And I think the answer there is spread yourself. Don't put all your eggs in USDT. Don't put all your eggs in USDC. Spread it across, understand what you're actually getting involved with, and that's probably the best way you can go about it. But we will move on from there. So what's on next? What have we got?
We'll just quickly touch on probably the last of the kind of negative news that we've missed out on the last few months, but it just really relates to the SEC again. They're really doing a number on us, but they kind of recently, a lot of you would have seen that they kind of targeted Kraken and fined them for their staking product, their earn products. You would have seen these on majority of centralized exchanges. You go on, even Binance has Binance, and I think you can just buy, you can just deposit DOT or BNB, whatever it is, and earn say 5 to 10% yearly APY on that. But essentially, I think they cracked it at Kraken because of something to do with terms and conditions, I believe. And this kind of spooked people a lot, because they thought, well, they're going to go after Coinbase, which is another American exchange, probably the biggest if behind Binance. And then, there was a bit of FUD in the industry. But I think Kraken agreed to kind of end their on kind of chain staking services. And that would only affect their American clients, obviously, because it's an SEC thing. But it was just a bit of a worry that, the SEC continue to kind of pretend like they're doing the best by the industry and their investors. But really, it's a kind of, as we discussed, an after-fact narrative that they're just coming in once these things are already in place and kind of ruining it for people.
And their whole rhetoric is around protecting the consumer. From another instance of FTX, which I think realistically, as long as consumers are aware of the risks.
Exactly.
As Mitch said in the pre-podcast, they're always happy to protect the consumer after the fact, but stepping in to provide the guidelines and the security that we need before doesn't look so. So, no, that's really good.
Reactive, not proactive.
That's it.
Yeah.
And as I said there, Mitch, I mean, that's all kind of the FUD that's happened, the negative stuff behind us. But at the start of the podcast, as we mentioned, things have been better than they have been for a long time. There's life in the market. There's a lot going on, and that probably leads us into. Do we want to touch? There's a couple of things on
Yeah,
mining
just
in
with
there.
mining. Yeah. So I think, a lot's been said for the cryptocurrency market since we last spoke about, but I think the entire mining landscape has changed a lot, if not more. We've seen, I think we had our Q4 2022 report come in from the Bitcoin Mining Council, which now states that 63.8% of all Bitcoin mining is now done in a sustainable mix. We were discussing pre-podcast, and I'm sure a lot of those enthusiastic miners out there remember when Elon said, once it's over a 50% sustainable mix, that Tesla will start accepting Bitcoin and Ethereum for Tesla, I think, merchandise and cars and stuff like that.
Yeah.
And SpaceX, I believe, as well. So yeah, that's just one small thing. It's been really good to see that the industry is still pushing forward to adopt, sustainable energy as to power ASICs and different miners. And I think this is probably a pretty good contribution towards the hash rate, which you guys can touch on, which has been heading upwards and putting in new aths really over
100%.
and over.
No, that's exactly right. No, it's awesome to see. And in that really extensive and solid article that you wrote, Mitch, there's some great points in there. Some relating to the Bitcoin hash ribbons,
Yeah,
which we encourage people to go and look at. I'll put the link to that article in the
yeah.
description for this video for people to check out. But it's basically a play on could
I'll
we
touch
be?
on it a bit later as well when we discuss the Bitcoin price action. But
Yep,
yeah,
perfect.
we'll chuck that in the
Perfect.
description.
Okay, so that's that. What else are we looking at here? We've got.
So yeah, just the hash rate. So I think a good point to make about the hash rate is, I think the hash rate has more. I think I read has more than doubled than when we were at 69K Bitcoin. We're at 23K now, it's almost a third or whatever pretty much exactly a third. And the hash rate has doubled, which is showing how competitive, mining's becoming. I think we saw, particularly in the last 2 months, we've seen the hash rate soar because a lot of the institutional companies such as Riot and CleanSpark have really been able to lead the way in the increasing Bitcoin mining production. That has something to do, obviously, with the weather over in Texas and US states persisting a bit better, which allowed them to turn a lot more miners on. And I think, the obvious inferral here is, Bitcoin being at a better price has made, a bit more profitable to actually mine now. So everyone's switching their miners back on, which is resulting in, obviously a larger hash rate. Yeah.
Yeah, I think particularly with that as well, one of the things that I've sort of seen a lot of articles about with, particularly in the US and EU, is that, circa end of 2021, a lot of these bigger institutional companies were putting orders in for, hydro units, for XPs, 2 to 5, 6 months down the track. So they started coming online mid last year towards the Q3 area, while everybody was powering down miners of older generations because they just weren't profitable.
Yeah.
So now the price has moved up. Energy, in a sense, if they are able to secure a better price with the renewable sector coming up to create more opportunities, it's just led to more people turning more miners on, as well as new miners, et cetera, et cetera. So it's going to push it up for a bit, but ultimately at some point there'll be some form of stabilization because we'll go through the halving and older machinery just won't be able to cut it.
Yeah,
100%. I think one reason why we see a lot of these mining companies get so much traction in a short period of time is because it does not take much of Bitcoin's price to increase for profitability of mining to increase substantially. A power bill equates for a certain amount of your expenses when you're mining. And once Bitcoin starts going from 20,000 to 40,000, well, your income's double, but your power bill, it then becomes a very small part of it. And the window for people to get involved in mining once Bitcoin's price starts going up is really, really small. Right now, if we're seeing 100 terahash miner at 100 or 110 terahashes, it might be selling for $5,000. As soon as Bitcoin goes up a little bit, a couple $1,000s, that can go from 6,000 to 8,000 to 9,000 very, very quickly. So what's going on is people are looking at it going, okay, we've seen these previous cycles before. We know how quickly this can get not necessarily out of hand, but in a good way out of hand, how quickly profitability can come up. Let's get in right now whilst that hardware's cheap, and then be set for the next kind of 12 to 18 months, if not more.
100%. And that's sort of something that I guess we can reflect on in the sense that, say, with XP units, when they first came out, they were circa 14, 15,000 roughly when Bitcoin was at 20 grand.
Yep.
US. And then obviously we tanked and thus price action followed. They're still sitting around that 8, 9,000 sort of area, even though we're at 20, 23, 24. So it won't take long until that price goes up, until scarcity hits. They've slowed down production just to meet demand in a sense. They're not going to make 1 million of these units and not be able to sell them. So at some point, scarcity and demand will create havoc. And, we've got a lot of clients that are somewhat understanding that and going, all right, well, if I buy it now and Bitcoin hits 40 grand, my ROI goes from roughly 2 years to about 11, 12 months.
Exactly that. And it just happens so quick as well.
Yeah, and that's not a huge stone throw. Do you know what I mean? Like, yeah, we're talking, 50-odd%, but we've done that in a month. So I wouldn't exactly say it's out of the picture.
That's exactly it.
Whereas, trying to get into the market when the miners, when BTC's at 40 grand, you'll be paying 15 easily for that.
Yeah, for sure. I think probably now, given we're on the hash rate, and Taylor, I believe you sent out a really helpful email to clients about this. But even when we're talking about the cost of miners and the hash rate continuing to soar, that there's starting to be, we're starting to see some other avenues come in for generating transaction fee revenue. And a really cool, exciting innovation of Ordinals has appeared.
Yeah. So I guess it's sort of a piggyback on the sense of where ETH is, in the sense of putting obviously NFTs and whatnot onto blockchain as well. So it's the first of its kind for BTC. It's something it's obviously still in development. This is still early days, but it's a really positive sign in the sense that as mining continues, as rewards halve every 4 years, this will create another revenue stream. While it's probably somewhat insignificant at this current time, over the next 5, 10, 50 years, it's going to be pretty dramatic. They were saying that I think it was in the first 3 weeks of Ordinals being live, it generated over $600,000 just in transaction fees. So it's definitely got some form of productivity. It's just where that will land for us over the long term. And we're starting to see more and more people starting to build on blockchain, on Bitcoin blockchain, which is always a positive. More and more NFT projects, games, all that sort of stuff, which is a pretty exciting place in that sense.
So exciting just to see something like that, maybe 6 months ago, the average person or the average miner probably looked at, calculating profitability is, okay, these are the variables there that can make me profit. Bitcoin's price going up, the reward per block, etc. And then for another element just to come in and be like, whoa, hold on, this could actually increase profit. Maybe not right now substantially, but it could increase profit substantially. It's just like another little mix to come in there. It goes, oh, cool, okay, that's something I didn't factor in. Let's see how it affects things. I do think that, it'll take some time, but yeah, hopefully we do see some profitability coming through from this Ordinals change.
Yeah, it was really interesting. I actually saw an article this morning that touched on it in the sense of how adoption on that front would change the entire landscape for mining. Being that, say, for example, like in the projects that have already started have been really small, like Yoga Labs, for example, did an NFT project for only 1,000 units. So very small in that sense. But if you had something of scale, say, from an Australian point of view, say Ticketek decided that they wanted to start doing tickets for NFTs on Bitcoin, you're looking at, 1 million plus transactions in the space of a few months on that. The revenue that would generate would change everything from a miner's point of view. So it's a pretty cool little time in the sense that if all it takes is that one little thing, and it's going to put us into a completely different spectrum.
100%. That's really good. All right. We'll probably go into, do we want to talk a bit about base? We've covered it a bit there. I want to get some price action stuff in there. So
Yeah. I think I'll just quickly run us through just kind of Bitcoin. I'll try and I won't be able to do this with any charts, obviously. I think the sticking point here is I've pretty much summarized what's probably occurred from November to now and whether a bottom or not, the arguments for and against, as we mentioned in that article, which we can link. And for those that really want to take a look at and kind of form their own opinion, you can. But whilst we are doing the podcast, I will quickly just mention the main things for Bitcoin's price action that's really important. The cool thing is we have done as much as 55% for 2023 since kind of the start of January, or since the low we put in November after the FTX thing. And I think the sticking point around that bottom is what people have to understand is from when we put that low in, I think was it 18,000 in June after Luna, or 17,500.
Yeah, 17,
We actually,
yeah,
76. We held that from June to November, so 5 months. And it wasn't until we broke that low or really lost that support was because of the FTX Black Swan. And even that Black Swan couldn't push us below 15.5. And, everyone was, I don't know if you guys remember, but everyone on Twitter, everyone in the industry was saying, 14K first, then 12K, then 10K, and maybe 8K. Everyone had come there, but it's been really positive to see us, kind of put in this rally. Which is, like Will mentioned, coincided with the hash ribbons indicator flashing its buy signal. We've seen the pure multiple flash as well and kind of break above its normal sense. And then I explore all of this with charts in the article, but for those Trading Academy members, you've seen them in the past as well that I've talked about them. And there's other things such as the halving approaching, which, a lot of you mining enthusiasts understand and comprehend, RSI. And yeah, I think the main only bearish thing I'll say with price action is, we, at the end of the day, we're just stuck in a range that we're trading. We tested, I think it was 3 times, was it, Taylor, that 25.3K tag. That's the major resistance level that we're at. And we this failed to break. And I will point out that would be largely because of wider macroeconomics. I could almost guarantee you if, the Feds came out tomorrow and said we're coming in with 0% interest rate hikes from here, Bitcoin will fly to 30K plus. And as would the S&P and the NASDAQ, they would break out of their long year downtrends and resistance levels as well. And I think a really important notion to discuss macroeconomically is, the DXY has pushed back up, and we are still seeing quantitative restrictions with the US Feds, but what about the Eastern economies? And it's a notion that my article explores because, we're seeing China open up due to their COVID zero policy now ending. We're seeing Japan putting liquidity back into the market as well. So for those old heads that are in crypto, I think people have to remember the biggest market for cryptocurrency in 2017 was China. It wasn't the US, it was China. And we've seen Hong Kong legalize cryptocurrency tradings with the blessings of the Chinese government, which is a huge thing to see. So who knows, if these markets, Japan, Hong Kong, China, other Eastern economies, you can't rule out that would mitigate the restrictions in the US. Yes, the US is the biggest economy. It does dictate largely the global trade, but these economies are just as big in terms of crypto. And we could be well explain a situation as to why we saw really poor CPI data come in, but BTC hold its price and actually move up from 21K to 25K again, because it's not just traders in the US that are getting restricted. It's the ones that have got easing that are coming into play. So yeah, just something to think about. But we'll post that article in the description, or we'll send it out. And I think it's a really good read for those that want to kind of explore where BTC and where the wider economies are sitting right now.
Yeah, really good summary. I think also something that's been really exciting lately, and everyone's kind of seen the release of things like ChatGPT. There's been those AI projects that have just been absolutely gaining unbelievable amount of investment into them. Mitch, I know you chose probably some of the best ones for the Trading Academy members, and we had a good ride on those. So do you think we see another wave of investment coming through into those? What's your predictions on that side?
Yeah, so I think the probably another reason for a good market push as well. I wouldn't say it held up BTC's price, but was this exact narrative. We see them come in all the time for those ones from the previous bull market. You all know it was the metaverse, and it's these narratives that essentially don't really actually have the utility in place yet, but it's the speculation that pushes them all. A lot of them do. We've seen tokens like FET Ocean, even BDP, a lot of these even older tokens getting pushed because of this narrative. And really, it was opened up by ChatGPT getting released. And I think we saw Microsoft have a $10 billion investment into, was it Bing's chat?
Yeah, something like that.
It was GPT, wasn't it?
Maybe it was ChatGPT. I think one of them, yeah.
Yeah, ChatGPT, they put 10 billion into it.
Yeah, okay. And I think maybe Google was doing its own one with, yeah. Anyways, yeah, so we are seeing this. And I think what you see more often than not is, these do a huge run and they'll consolidate for a bit now. But, if we see another market run, this is exactly where you want to park yourself in a few of these speculative plays, because you can actually, end up, these are the ones that might do, your 10x, 100x, 500x, whatever it is. So yeah, I would keep an eye out for that, because we know that the cryptocurrency markets at the best of times are fueled by narratives, and this is the narrative that's floating at the moment.
100%. Well, that's probably enough to cover in our first podcast back. Is there anything that you guys that we missed that you want to tap on before we conclude things off?
No, I don't think so. I think, just with wider crypto, we've seen a lot of, I think another thing to point out for those potential traders and investors is to start to kind of open up your scope to different chains. We've seen Arbitrum really growing. So, be careful to look out for a lot of Arbitrum projects, particularly if you're into DeFi. I'm sure Will and Clint and the guys over at the DeFi course and academy will be looking into a lot of strong Arbitrum plays. I know us at the Trading Academy, we've recently invested into one of the biggest Arbitrum plays that has huge potential to grow as a perp dex. And then also be on the lookout for different layer twos that will be releasing. Coinbase's Base, I think you mentioned before briefly, Will, looks to be a big one. Optimism is a huge growing chain as well. So yeah, just keep your eye out for things to grow, because if this age of the market, if we do break out, it's where you're really going to see the massive 2021 opportunities start to arrive. And I'm guessing a lot of cryptocurrency enthusiasts over the last year have been finding it hard to make money and have probably forgotten how easy it is once the tide does turn. So
no,
yeah,
that's it. And that project that you mentioned there, Mitch, without saying its name, we actually publish in the top picks, our Imperial Wealth top picks for 2023. So I'm going to put the link in the description of this video. You can go and download that. There's 5 coins in there. Of course, Bitcoin and Ethereum are in there, and 3 other altcoins that we think have massive potential growth and already have had great great growth already. So go and check that out. And then, of course, if you are interested in getting into DeFi and all these chains and airdrops and creating liquidity tokens to earn between 50 to 300 to even 1,000% yield on your coins, these things are not impossible in the world of DeFi. So make sure that you reach out with the book a call function, and one of our experts will help you out there. So that's it for today. Awesome being back, guys. We'll be back next week with another podcast and plenty more to cover. So thanks for tuning in.
Awesome. Thanks, guys. Appreciate it.
Thanks, guys.
Cheers.
Cheers.
See ya.